YouTube land, I'm known as B. I will be making a prodigious as well as disturbing forecast tonight. So without further ado, here we go. Let's start with China's latest chess move. As of March of this year, London bullion banks have been using the Chinese yuan, i.e. the renminbi, for the purchase and sales of precious metals. They, the Chinese, have announced that this will have transpired by the end of 2017, but it actually took place in March of 2018. This entails exporters of oil to China accepting yuan, in payment for oil with a special incentive. The yuan received by the oil exporters will be redeemable in gold. Consequently, the bullion banks will be recipients of yuan payments from the exporters. These bullion banks are, by the way, in London. These bullion banks in London formerly controlled and manipulated bullion prices via paper, gold, silver derivatives. This doesn't bode well for the petrodollar dinosaur. By the way, Saudi Arabia sells about 1 million barrels of crude oil per day to China right now. Saudi Arabia was the source of the de facto backing of the US dollar with oil, which kept the fiat dollar alive since 1973. Saudi Arabia has a much bigger incentive to accept the yuan in exchange for gold than the dollar for hot air. Do the math. The US dollar, along with the entire Western paradigm, is on the wane. Meanwhile, at the proverbial US ranch, there's a plan involving the banking system. It's called bail-ins. Brought to you by the Financial Stability Board. The FDIC holds around 20 billion US dollars in its fund. They can only cover 250,000 in the event of loss. The depositors represent 4 trillion. The derivatives traders represent 14 trillion, which is almost as high as the national debt. The oil derivative bets are largely traded by the big banks, who are first in line to be covered by the FDIC. The only way the banks won't need said coverage would be if crude oil rose to $70 per barrel and stayed above that for a generously extended period of time, let's say for a year or more. If this doesn't happen soon, the banks will owe $50,000 per barrel, which they don't have. 16% of their assets can be used for a bail-in. In the event of economic collapse, the pension funds will buy this debt in the form of bonds, which will be inadvertently paid for by the depositors. So in effect, the holders of the retirement funds, e.g. pension fund holders, investments will be converted to stocks in insolvent banks, leaving these depositors holding the proverbial bag. This, in a nutshell, is a bail-in. This is quite disturbing for those who are paying attention. Unfortunately, about 95% of the public, maybe more, are asleep at this time due to their cognitive dissonance and their normalcy bias, which goes beyond the scope of this recording. So on the next video, I might expound on that. But moving right along, the average economic professor in the universities are not aware that physical gold and silver are sound money. And the average person doesn't even know that what money is, The average person doesn't even know what money is. I heard Jim Willie break it down, the difference between money, legal tender, and currency. Legal tender can be dollars backed by gold if on a gold standard, or it could be fiat dollars backed by nothing, which is currently our reality. When on a system of usury, currency would be the paper used for said legal tender. Whether on a fiat standard or a gold standard, money is a tangible asset with intrinsic value like gold or silver, physical gold or silver, that is. Depositors at banks are what you call unsecured creditors. Ask your banker. That having been said, at this point, the Western hegemony is declining. So in effect, the US, Europe, Australia are in a similar situation as Africa and the rest of the East around January 2nd, 1492, which was the mathematical beginning of this paradigm. The reason that they want to crash the U.S. economy right now is to create a multilateral government and a multilateral currency, which would be universal, ubiquitous, a one world currency, if you will. I believe the drop on August 10th was a low. From there, it will rise until Monday, August 20th. On that day, it will make a high of 2920, the S&P that is. From there, it will drop until Friday, August 24th. On that day, it will make a low of 2898. From there, it will rise until September 5th and make a high of 3022. From there, it will drop until September 10th and it will make a low, the S&P that is, of 3001. From there, it will rise until the final high, possibly the final high, on September 26th at 3166. From there, it will drop until October 3rd at 3137. Now, we have a possible double high. So the following high, which will be October 9th, will possibly be a high of 3210. So if the September 26th high is not the final high, then October 9th will definitely be the final high at 3210. Also on the 26th of September, there will be another high. Dare I say it? In a stock called Walmart. I have a few shares in that stock myself, and I'm selling on that day and I'm walking away. It will make a peak of $127 a share, and then it will drop for the next 5 years. The pending crash on December 3rd of this year won't only exacerbate, but accelerate the mass closings of Walmarts nationwide, which have already taken place. Hopefully I'm wrong, but time will tell. From there, it will drop until October 22nd, on which day it will make a low, that is the S&P, of 3034, and Dow Jones 27,927. From there, it will rise until October 26th, on which day it will make an intermediate high of 3127, and the Dow 28,877. From there, it will drop into a low on November 5th, which is on a Monday, at 3005, and the Dow at 27,656. From there, it will make a high on November 15th, 2018, on Thursday, at 3145 S&P and Dow Jones 29,068. Now comes the crash. Not just any crash, this will be the crash of all crashes, to end all crashes. And this will be on a Monday, December 3rd. From this point, the market should drop until 2023, April 3rd to be exact, or approximately April 3rd, time will tell. Folks, I'm doing this for a living right now. For the past 6 months, this has been my livelihood. This is how I pay my bills, this is how I eat. So hopefully, things will improve for me and whoever else decides to utilize this situation for the better. Happy trading. Okay, before we go, I need to expand a bit more on what an unsecured creditor is and what form of global currency it will come in. First off, an unsecured creditor, which is a creditor other than a preferential creditor who doesn't have the benefit of any security interest in the assets of the debtor. In layman's terms, the money in your bank account is not yours. The unsecured creditor is the customer, and the pension fund holder, in other words, would be me and you. And now, for the universal currency. I believe the SDR, which is the special drawing rights at the IMF, in other words, International Monetary Fund, will serve as the one world currency. Back in 1988, they made a reference to a one world currency on the cover of Economist magazine, which is well known for accurately calling events before the fact. There was a picture of the phoenix rising from the ashes of the collapse of our system. I'm going to go out on a limb and predict the date that it may be announced. I believe it could be announced by November 18th of this year. I may be wrong. Time will tell. Well, folks, we're pretty much finished now. But, I'd be remiss not to add this one last note, which has to do with physical metals, gold or silver, preferably silver. Physical gold and silver, that is. You must have some of that before the crash. It's at historic lows right now. And as the economy worsens, each person who has gold or silver will be more enriched. So make sure you do that, Have a nice one.